Hello, this is Robert Miner with Dynamic Traders Group with our weekly DT Trade Strategies video, a brief video that we do every week for our YouTube and Twitter followers. Last week was a week off, so it's been a couple weeks since I've done a video, and we take a look at different markets that might be in an immediate position for a trade on the upcoming week. We use practical Elliott wave, Fibonacci time and price, and multiple time frame momentum strategies to identify these trade opportunities. And in these videos, even if you don't trade the markets that we talk about, they're meant to be educational so you can learn how to trade any market in any time frame. So if you're interested in what we have here, check out our DT reports at dynamictraders.com. We do a couple videos each week. We do daily updates on stock indexes, gold and silver, GDX, euro, dollar, Bitcoin, Ethereum, bonds, notes, crude, soybeans, and more. And also join our DT Traders News at dynamictraders.com. Choose the Traders News tab. You can sign up for that. It's absolutely free. We don't require any charge card information, anything like that. So we place these videos in that section every week. Plus, at least once other time a week on Wednesdays, we do an update on a different market. So check it out. Join us at Traders News. You'll get a little bit more information, see a little more about what we do, and most importantly, you'll begin to learn more and more how we apply Elliott wave and Fibonacci and dual time frame momentums and a lot more to make real world practical trade decisions. Okay, let's get started. By the way, I hope you checked out our video from a couple weeks ago. It included some details on the S&P and crude, and especially on the S&P, where it laid out all of the technical position where it was probably at or very near a weekly, at least a weekly high, maybe a multi-month high, and the specific trigger that would indicate that that high is complete. You can still review that video. That information is still good. Of course, as we know, in the last couple of weeks, we had a very substantial decline right from the reversal that we identified in that video. And crude, of course, has come down as well. And a couple of weeks ago, we did one on Bitcoins in some details about the probable imminent high, significant high in Bitcoin and Ethereum. So check those past couple weeks out, those videos. That information is still applicable. Those trends are just now getting underway. Let's look at another market that might be at a critical juncture right now. That's the euro and the dollar. So we're going to look at the euro. Of course, it's just the inverse for the dollar. This is the weekly data for the euro. And here's the significant technical factor that came into play this past week is that the past week the euro made what we call a triple time frame weekly momentum bull reversal from the oversold zone. That's pretty significant. That's pretty solid piece of information that indicates the euro has made a weekly low. Now, a weekly low may only be followed by 3 or 4 weeks sideways to up, but because of the higher time frame position of the euro based on pattern and some other factors, it's a possibility that the euro has just completed a corrective decline from the January high. In other words, this would be the low not just for the year, not much time left in this year, but the euro would eventually resume a bull trend to well above the January high. Now, that's getting ahead of ourselves. That's a possibility, but we really want to look at is at the very least we're in a position for what we call a weekly low and to be sideways up for a few weeks. That's a great opportunity for a trade right now. Let me describe one other thing educational wise that you should be aware of is also at this bull reversal in the weekly momentum is that the weekly momentum cycles were what we call a bullish divergence with the price cycles. That's because the bull reversal and the weekly momentum was made at a higher level than the last bull reversal, but price was at a lower level. So that represents there's some buying coming into the market. And it's just a wake-up call. Also last week or 2 weeks ago was just the simple low to low to low on the weekly data. And what are these lines in here? Well, That's called the Andrews medium lines, and it's with my fib channels around the medium line, which I developed 20, 25 years ago or so as an addition to our Andrews lines. And you can see how often this channel was tested ever since the May high. Came down, tested it, had a correction, came down, it kept within this channel. And the low of 2 weeks ago is just the opposite side of the channel, and then it rebounded back up. So we put all this information together, and we're probably in a position to complete a weekly low with a potential that this is a corrective low that's complete. And so that's significant. Here's the daily data. We want to work down to daily, then intraday data to get a specific trade strategy. So we don't just, dynamic traders, we don't just look at position in the market and give kind of our broad idea of what's going on. We got to look at the market and identify a specific trade setup with a specific entry price and an initial protective stop price. Well, here's the daily data. And coming off of the November 24th low, we'll see this in more detail in the intraday in just a minute, a beautiful 5-wave advance. That's called an impulse advance. And it indicates that more than likely the trend has reversed to bullish, at least the trend over the next few weeks. So again, that's confirming the bull reversal in the weekly momentums, this 5-wave advance. So let me go down to the daily data. We'll break this down a little more and see where we may be at. So again, here's the 5-wave advance. I should have labeled that like I did on the daily. Let's just do that now. 2, 3, 4, and 5. And that's in Elliott wave terms what we call a wave 1 or an A, because 1 or A takes generally the same form. Whichever it is, it would indicate that we would then have, euro would then have, a wave 2 or B correction over several days. And when that 2 or B correction was complete, then the bull trend would continue for at least one more 5-wave impulse trend advance to a new high, and potentially much more since the weekly momentums have made their bull reversals. So where are we at right now? Well, more than likely, by early next week, if the euro is making this wave 2 or B correction as anticipated, it would be complete by early this week. In fact, Monday is the 100% low to low to low. That would be an ideal time to complete this wave 2 or B correction. Also notice over the last 3 days since it's made the wave 1 or A high on the 30th, how the euro has been essentially sideways. So this, again, there's buying coming into the market. It's supporting the market, and the euro's already reached a type of retracement that would complete the wave 2 or B. So when we're in a position to have completed a correction, which has the high probability of being followed by a continued bull trend, we can just look at the last minor swing high, and if it's taken out, that's a buy stop to go long with an initial protective sell stop, whatever is the low prior to entry. So we already have a specific trade strategy for the euro. Now you can trade the euro in Forex. There's ETFs you can trade it. You know, a lot of vehicles depending on how much leverage you want or you don't want. The whole point is take advantage of this information over the next few days. It's not a forecast that the bull trend is going to continue. Listen to my language, is that the euro's in a position to complete a correction which would be followed by a weekly bull trend over the next at least 2 to 3 weeks, if not more, if not, in fact, much longer. And when it's in that position, we look for what can the market do to confirm that that correction is complete, and that would be a trade above this wave B high. And we have then a specific entry strategy, specific stop, so that if for some reason we get we get in the market above this high, we ever stop. If we got stopped out, it would be a fairly minimal capital exposure, fairly minimal loss. And that's what trading is all about, identifying opportunities with high probability outcome and acceptable capital exposure. So that's what we're looking at this week. Maybe one of the best trades of the upcoming week would be long on the euro. And of course, that would mean it would be just the opposite conditions for the dollar, probably short on the dollar. Well, if you like what you learn here, we also got some details on Bitcoin and Ethereum, and of course all those other markets that we follow in our regular full videos that we do for subscribers each Saturday and Wednesday, and then of course we update those videos every day with a brief update if there's any technical change or new targets that we've got. Well, that's it for today. It's Robert Miner with Dynamic Traders Group. Have a fantastic week. I hope you'll join us. At least check out our Traders Resource and Traders News. Get on that list and you'll get some additional updates each week. Take care.